The broadcast is now starting. All attendees are in listen-only mode.
Okay, let me move my mic over. Looks like this is a good start because I have the right link. So that's a good sign. Let me organize some things real quick. Guys, if you have questions, you can just put them in the question box and I'll take them as they come along. If you're brand new, what I'll do in the beginning here is I have to go over the disclaimers. So if you've been here before, what have you, I'll probably take 5 or 10 minutes to do that. So if you want to go get a cup of coffee or just want to hang out, it's up to you. But what I'm going to do is I'm going to go over the disclaimers first. All right. And then secondly, the game plan is to get into the trade setup. Okay. Those that are brand new, this is going to be a great syllabus for you because you're going to learn the setup, the buzzwords. We'll get into a live setting. And if these setups appear in front of us, we'll go inside the DOM and we'll execute the trades. Okay, so we'll enter the trade, we'll manage the trade, we'll get out of it. We'll review the trades. That's something that everybody should be doing. Not only that, I'm going to make some observations throughout the next hour. Some things that people should be doing, some traps to stay out of. Over the course of the years, people have sent me screenshots of their trades. And what I'll do is I'll critique them and give some feedback. So I'll see some of the same bad habits over and over and over again. So those will be the things that I'm going to share with you. Okay. Those guys that have been around for a while, this is a good time to ask questions. This is a good time to get some more screen time, to get to know the personality of the markets that we're trading. Again, feel free to ask questions. Guys have been around. If you guys see a setup and I'm over in a different market, fire away or sound off and I'll pop in over there. So that's kind of the game plan this afternoon. Okay. There's some things that are moving here. This is the crude oil right off the bat. Seems to be rocking and rolling. So there might be some stuff for us to do, and win, lose, or draw, we'll talk about it. Okay. So that's the game plan. So the first order of business, as I said, was the disclaimer. And again, a lot of guys will just put this up and say, hey, read it and throw it underneath the blanket and move forward. I'll take a few minutes to talk about it because I've been doing this for almost 25 years, and I've seen this disclaimer hit people right smack dab in the face. So the bottom line is this. You can lose everything and some in your trading account if you don't have a trading plan, if you don't have a lack of discipline, if you're not using stop losses, if you don't have a trading plan, if you don't have a set of rules, if you're not engaged in the market, watching what's going on. All right, that means you're in front of the screens and you don't walk away or, you don't cut the grass. You're familiar with what's going on in the marketplace. If you turn your back to it, like I said, this disclaimer right here will hit you right smack dab in the face. Okay? The good thing with CFRN is that you actually do have a trading plan. It's a set of rules. Okay? Every trade has an 8-tick stop attached to it. Okay? That's a set of rules. So we kind of eliminate that. Okay? We're using aggressive risk management. So you certainly have to be in front of the marketplace, okay? And if all fails, okay, you're doing all the right things. You place a stop, all that other stuff, and the market does something goofy, at least you're in front of the DOM, okay? That's this tower here. At least you're in front of the DOM, and you can take action, okay? You can hit exit at market and cancel if you have to, okay? So again, we're talking about leverage. Usually the guys that get to CFRN have already been beaten up. Okay, if they've been to this guru, this guy, this educator, they've already been there. Okay, so this disclaimer is really kind of beating them up a little bit. Okay, so they understand this. The disclaimer really is to scare the new guys that are just brand new to our space, wondering, what is this what I'm getting? What are these emails am I getting? What are this, what's this thing called futures? That's what the disclaimer is for. It's kind of a warning sign. It's meant to scare you. So, as it says, it's a leverage market. So you can lose everything and some in your trading account if you're not doing those things I just outlined, period. No other way of sugarcoating it. Second disclaimer, my relationship with CFRN. Yes, I'm in the training room every single... Stand by. I know every morning I'm in the training room. Okay, so sometimes people get me mixed in with, working for CFRN. And there is a fine line between them and me. Oh my God, someone really wants to talk to me. The bottom line is this. Their indicator set is... All right, hold on. Let's make sure this isn't an emergency. Hello? Wow, that was crazy. Okay, someone called my cell phone and... Anyways, all right, I got distracted there. All right, my relationship with CFRN, the bottom line is this, okay? Their trading platform, their indicator set is built inside my platform. The platform you're seeing is called DTPro, okay? The squiggly lines that you see in front of you, all this stuff here, that's property of CFRN, okay? So when it comes to downloading the platform and downloading the indicators and possibly the brokerage, the execution, all that stuff, those questions would come to me, okay? If you're deciding to go down the CFRN path and you're saying, hey, I'm going to do this, pursue it, well, the next thing that you would do is you would reach out to CFRN directly, and any payments and stuff is between you and them. Anything on their site is between you and them. The members area, the Thursday night workshops, the Daily Double, the Logic 247, all that stuff, the communication is between you and them, okay? Basically, my role is support of the platform. Now, I take it a step further because I am doing the CFRN Thursday, and I took that on because there was a demand for it. People raised their hand and say, hey, I'd like a slowed down version of this to help me get through some of the hurdles that I'm having. So being that I'm around and been in the trade room every morning, I know the setups, so I can really offer that support. So I do take it a step further, okay? But again, there is a line between us and CFRN. A big question I always get is, hey, does CFRN get paid commissions on every trade I do? That's a big question that pops up, and that's a big fat no. They can't share in it. You can't because they're not registered. So no, that doesn't happen. So, and actually they never asked. So they're trying to do everything they can to be compliant, which is a good thing. So other than that, that takes care of the compliance stuff that I have to talk about. So the next order of business now is to go over the trade setup. Okay. So again, brand new guys, this is the webinar you want to sit in, because once you get to know this stuff, you'll be able to go inside the training room and maybe understand some of the things that Michael is doing. Okay. You'll hear some of the same buzzwords that I use, the setups. This will be a great syllabus again. Okay. So here we go. First order of business is the time frame. Notice we're on a 4-tick range chart. Okay, that might be different than something that you're using. There's some advantages to it, but the first thing to do is, how do I get to a 4-tick range chart? So, normally you're on a time-based chart. You might be on an hourly. You might be on a daily. Okay, if you have DTPro, this little box here, it says daily. There's a little drop-down box next to it. Left click, and select custom. A box will pop up. Just select range bar and make that 1 look like a 4. Hit OK, and your Crude chart should look something like this. Okay. One of the biggest traps that people fall into, because CFRN talks about 8 tick stops and get your goal, and that's a certain amount of ticks, and they're just associate everything with ticks. They'll go down to the custom bar and they'll select the tick bar, and they'll make that 2 look like a 4. Hit OK, and the chart looks. The bottom line is, if it looks like this, you fell into the trap. It should be on a range bar, 4 tick range bar. It should look smooth. And the reason why it looks smooth is because the height of each candle is 4 ticks in height. Okay, so a lot of times you'll hear Michael start calling out the highs and the low. If the low is 67.41, then the high should be 45. What he's doing is he's being proactive. So what he's doing is actually buying it. He might be buying or entering the market on a buy stop, or he might be entering the market on a sell stop. And if you're brand new, what that means is he's buying it on momentum. So if the market takes off, it's going to enter him into the trade. Or he's selling it on weakness, which means if the market starts breaking down, he's going to get short on that weakness. He's going to get in on the entry on the weakness. That's what that means in a nutshell. All right. So that's why he's doing that. The magic formula really is this. Whatever the low or the high is, add or subtract 5, and that's the price you put in. Okay? So look, the low was 67.41. Okay, add 5. Okay? Then 67.46 would have been the entry, and you would right click. Okay? Add or subtract 5, and that's exact order that you place. But you're buying it on a stop, or you're selling it on a stop. Okay? So that's one of the reasons of, that's why we're on a 4 tick range. There's other reasons, but that's a big one because you'll hear Michael call those numbers out. All right? So back to the diagram here. Notice this has been around since 2012. Big question I always get all the time is, has this been tweaked? Has it form fitted over the years? No, this is the same setup that's been around forever. Other trades, the Tuesday workshop that Michael does, the 137, the 164s, the white bar stuff, that's all been created along the way. Okay, this one has been around from day one. So I always go back to this one because I know it works. So what we're going to do is we're going to work on the top portion of the chart, price action. All right. So here we go. Buzzwords. The red and blue line is referred to as the MA1. Okay. The red and blue line. The green line is referred to as the BBC, and that is short for bullish bearish cross. Okay. Now, why are those two important? When the MA1 crosses the BBC, so when that red and blue line crosses the green line, as it does here and here and here, that is step number 1. Okay, that's the cross. Step number 1 lights the match. Okay, now from this point on, I want you to be thinking color. Okay, so if the MA1 is red and crossing the BBC, you're looking now for shorting opportunities. If the MA1 is blue and crosses the BBC, you're looking for bullish opportunities. Okay, the one that's highlighted here is a bearish cross. Why? Because the MA1 is red. All right, so I want you down the line here, I want you to be thinking color, because there's going to be a common denominator. All right, the fact is you want everything ideally to be the same color. That stacks all the probabilities in your favor. Okay, so the one that's highlighted here is a bearish cross because the MA1 is red. All right. Step 2. At some point after the cross, okay, this is a bearish cross, the normal thing for the market to do is to gravitate toward that green line or that BBC. That's normal. Okay? So what you're looking for is for the market to go up and touch the BBC as it does here, but then closes in the direction of the trend. The trend was defined as being bearish because we had a red MA1 and we had a bearish cross. So guess what color this should be? It should be a red candle, right? So now you're getting the picture. It's starting to kind of all come together. Okay? If it was a bullish scenario, we would be looking for a green candle or a blue candle. Okay? So again, we get a bearish cross. The MA1 crosses the BBC. We expect a normal to happen, which is the green line gravitates toward the BBC here. Okay? This price action. And we look for a close in the direction of the trend. Okay? We look for a red candle. That is step number 2. All right? Once that's in place, our eyes now gravitate toward the slingshot. And this is a big portion of it because actually the trade exists down here. All right? All right, so this is going to lead us into step number 3. So again, some more buzzwords here. This red and blue line is referred to as the cycle. Okay? And the green line, well, it's just the green line. There's nothing special about it. But here's the scoop. Okay? What the cycle is doing, the fact that it's red, it's telling us the trend is down. Okay? We identified the price action up here as being bearish. We identified step number 2 as, hey, the normal thing is happening. The market pulled back to the BBC and had a down close. It's red. This is red. The cycle should be then red. And this is saying, hey, the trend line's down. All right? This green line pulling away in conjunction with this price action, okay, is that third variable that says, you know what? Maybe the market's doing the normal thing, and that's just an air pocket in this ongoing downtrend. And with the close here, this space between the green line and the cycle is the divergence that Michael's referring to in the training room. All right? So once you have that green line pulling away, once you have the divergence and the market confirming, hey, we got a down close in the direction of the trend, there's nothing else to do, all right, but to go inside the DOM and get short. We would actually go inside the DOM here and left click. Okay, that's what we would end up doing. Okay? We make money on the downside by left clicking in the red. If we get a bullish scenario, we're going to left click in the green. And as the market goes up, we make money in that direction. Okay? We do all our execution on the DOM. Okay? Green is buy, red is sell. Okay? So again, back to the drawing board. Okay? So this divergence here, this green line pulling away from the cycle, that space is the divergence that Michael is talking about. And what this, in the end, what we expect to happen is this green line to ultimately come down and touch the cycle, close the gap, so to speak. And in doing so, what the market's going to do is make a new pivot low. All right? And it's at this point, we're cutting loose the trade. We're getting out of it. Because what we expect to happen is the green line to do this. Pull away, pull away, pull away, until the cycle turns what color? Blue. Now the trend is up. And now the green line should be going underneath and creating bullish divergence. Okay? So it just keeps happening over and over and over again. Okay? What it does up here, in combination what's going on down here, is going to basically give you, the confidence to push the button or not. Those are the rules. Okay? Now, 1 second here. This is live and my phones are still buzzing, so 1 second, I'm going to mute. This is Bert. Nope, you got the wrong number. Thank you. Okay. So again, what we expect to happen is that to repeat itself over and over again. This green line pulling away, pulling away, pulling away until the market turns bullish, and then the green line starts doing this. Okay? So in the end, if you're signing up for CFRN, you're not learning to pick the top and the bottom here, and you're not learning to trade it from point A to Z. What you're learning to do is take a piece out of the middle. All right? And along the way, you're going to be trailing the stop, trailing the stop, trailing the stop. Okay? And every trade begins with an 8-tick stop. All right? So if you're trading crude or the gold, if you're dead wrong, you're risking $80 a trade per contract. If you're trading the beans or the S&P, that's closer to $100. If you're trading the mini Dow, that's $40. Okay? So that is what you're signing up for. Okay? Basically, you're learning to trade with the wind at your back, so to speak. Okay? And all the stuff that's happening in between here, what you're doing, like you're here doing today, is you're training your eyes to look for all this stuff. And in the beginning, you're like, holy smokes, this is a lot. But over time, it slows down, slows down, slows down, all right, until you start getting the hang of it. And that's why, CFRN will say, hey, you know what? You should be in the simulator and you should be practicing until you become consistent. And big thing, confidence. Confidence in the rules and identifying the setups. But you know what? Some of the guys that we get have never been on a DOM or a platform. Get used to pushing buttons, too. Okay? So that's what you're signing up for. All right, Mark's got a question. It needs to move 1 point away from the BBC. There needs to be some space. So after the cross, what Mark's referring to is the MA1 cross and the BBC, there has to be some space. Usually one candle is enough. One candle. All right? Note that I didn't say go short, go long, go short. Again, in the end, what you're expecting is the normal thing to happen, which is the market will ultimately gravitate toward this green line. And if we are in a trend, it'll reject this line and go down in the direction of the trend. That's what you expect to happen. Sometimes that doesn't happen, right? So what you're going to learn in a few minutes is what we do is we get in the habit of doing what? Drawing a trend line. The reason why we draw a trend line, because the normal might not happen. We may never get to the green line and the market falls apart. If that happens, at least you're going to be in a position to take action. So that's why I'm going to preach, you better get in the habit of drawing trend lines, because that's what you're going to see Michael do. If he's doing it, then you better be doing it. So that's the idea. So we're going to look for that setup in the next 45 minutes. Okay. So right now we're on the crude oil. Okay. Notice the first thing I did, okay, was I hit the zoom out button. If you have DTPro, you should get in the habit of doing that. Because with Michael's charts, it's a column, right? Sometimes you don't get to see a lot of the landscape of the market. If you just take a few minutes to zoom out and look left a little bit, you might see a little bit of extra support and resistance, and that might keep you out of some bad trades. Okay? So get in the habit of zooming out. Separation, okay. I'll bring that up too, Bart. All right, so crude oil. Right now we have the bearish cross here, right? We really don't have any divergence. So for right now, crude oil is off the table. Okay? So I'm going to start scrolling into different markets. All right. I'm looking at the DTPro natural gas. All right. Okay. I'm starting to get the bearish cross here, correct? All right. So there's potentially a bearish setup here. All right. I like the fact that the cycle is red. Okay. We want a red cycle if we're looking for shorting opportunities. Look at the slope on that too. Okay. It's got a nice tilt to it in the direction of the trend. So you should be excited about that. So the natural gas is in a position possibly to go short. All right. We don't have any divergence. That means that green line is not over the red line yet, right? That green line is not over it. So it's lacking some divergence, but it has a lot of the things setting up that potentially give us a short. So we're going to come back to this one. Okay. Potential short in the natural gas. Okay. And, some of the evaluations I just called out right there, that's some of the stuff and the habits that you'll get into with some time. Okay. You'll start seeing things kind of formulate before they happen. Okay. That's where you want to be. So if it does happen, again, you're in a position to take action. All right. I'm going to switch guns and go to gold. All right. First order of business. The first thing you should be asking yourself, are we trending? Okay, this one's a pretty easy and obvious one. Okay, this one kind of hits you in the face. We are not trending in the gold right now. Okay, so look, green dots, red dots. We got support here, we got a top here, and we got a top here. So right now, the gold is trading sideways. All right, the other thing, as I said earlier, get in the habit of zooming out. Look, I did one click of a button, and look, there's some pretty big support over here too. Look at the action off of that. So right now, gold is, look at this. It's even bigger sideways chop. Okay. So again, this picture, okay, was pretty easy and obvious. A few more clicks, boy, it's really obvious. We're stuck in a range here, and my gut feeling is in the next 45 minutes, we're not going to touch the gold. We're sideways. So the point is, again, number one, the first question on your list, are we trending? That should be the first question. And number two, get in the habit of zooming out to look for some other support and resistance to the left. Okay, your eyes will gravitate this way for support and resistance. Okay. All right, so enough of that. Gold is off the table. I'm going to go to the euro currency. This is an easy and obvious one, right? Are we trending? Absolutely. I get in the habit of zooming out. There's nothing over here, right? Earlier, if we were looking at this, I'd say we're in chop. Okay? Nothing's going on. We're sideways. Fast forward a little bit. Hey, we're starting making some lower lows. All right? So right now, the euro is trending, and we want to sell rallies if we get them. Okay? Let me turn off him. So let me show you after the fact business here. And ignoring, okay, that we're trending or not trending, but here's the bearish cross. The MA1 is red and crossing the BBC. Okay? So your thought should be, I'm looking for selling opportunities. Step number two, engage the trend line. Why do we do that? Because we don't know if it'll eventually get back to the BBC or this green line. Well, it does anyways, and we also have a down close. So there is step number two, right? So we had step number one here and step number two here. We didn't need the trend line because what color is the cycle? It's red. And is the green line pulling away from it? Absolutely. So with step number one, step number two, and this divergence, step number three, we would go inside the DOM and left click. And we make money if the market goes down. And what we expect to happen is the green line to ultimately come down and touch the cycle, and the market will make a new pivot low. This is kind of the ideal setup after the fact. That's what we're trying to look for here in the next 30 minutes or so. All right. So you guys didn't sign up for that. We want to look for some stuff that's happening in real time. All right, so I'm going to go into the indices because this thing is rocking and rolling. Okay, first thing that should stick out. Are we trending? Zoom out, zoom out. Absolutely not, right? If you're not sure, dynamic support, dynamic resistance are side by side. Support here, support here, support here. Resistance here, and we have a marginable high here. This is in chop fest right now. So the S&P right now, we're not going to touch. The spurt. Hey, can I call you right back? I'm in a webinar. All right, Sam. No, it's okay. All right. Sorry, I had to hit the mute button because the phone started buzzing again. So we're trading sideways in the S&P. All right, I'm going to try to look at the Dow and try to do something there. Okay, this is a mover and a shaker. So, okay. Notice the first thing I do is zoom out. Okay, we're trading a little bit of sideways here. I'd like to see more of a defined trend going on here. Okay, more of a defined trend. What we do have here is the bullish cross. The MA1 is blue and crossing the BBC. Okay, the cycle is blue. It's got a nice slope to it. So here, I'm going to do this anyways. See, this thing is moving too quick. One sec. All right, I'll make some. I wanted to try to get into the DOM and do something, just to show you what I did and how to do it. Okay. Jiminy Christmas. Well, here, just keep it where it's at. I couldn't even move it to break even. It moved so fast. Okay. Well, it is what it is. So let's just hang on. That doesn't surprise me. All right. So hold on. A lot just happened in a fast 2 seconds here, and that's why I hate even monkeying with the Dow. I wanted to point a few things out there, and it hit me right in the face. Okay. But here's the deal. Number one, I wanted to show you this. Bullish cross. We should be looking to buy pullbacks. Okay. Finally starting getting a pullback toward the BBC. Okay. We drew the trend line. Why? Because we don't know if it'll get back to the BBC. Okay. We had a bullish close. Not only did we have a bullish close, but we had a bullish close above the trend line. What color was the cycle? Blue. Had a nice tilt to it, correct? Everything was there to get long. All right. So I went inside the DOM to left click. All right. We finally got long right here on the close of this candle. What's supposed to happen is when the market does close on the other side of the MA1, as it does here, we move the stop to break even. And break even means your entry point. Okay, that's what that means. The fact that this thing just gapped back and forth here like it's doing now, didn't even give us a chance. All right, now hold on. The S&P is rocking and rolling, so maybe we can do something there. That's okay. We were trading sideways, right? And now we're not. We're trading out of the chop, so now we can look for buying opportunities. Okay. So again, what we're looking for the market to do is to gravitate toward the BBC. Okay. Now the cycle here is blue. Okay. It's getting a little bit long on the tooth here, so we might have a cycle reset here at some point. But let's see what happens. Okay. Hold on. Let's see if we get the pullback. So what we should do is we should engage the trend line. Okay. The green line is pulling away and we're starting to get that bullish divergence. Okay. 2 candles, draw the line. Okay. The cycle turned a different color on it, requires us to get in, close above. Okay. So that's the close above the trend line. Okay. So every trade has an 8 tick stop attached to it. Mine's not set right, so that's not good for the home team. So 1 second. What you can do with DTPro, okay, is you can automatically place a bracket order. See this little ticker triangle here? That allows you to set a stop automatically. If you left click next to buy stop and sell stop and right click over it and go factor in ticks, if you change that 20 to an 8, that will automatically place a stop loss for you. Okay? So you don't have to do any of that. Okay? So our stop loss would be right here. So we are long from here, okay, because we drew the trend line and we expect, and the market closed above it because the cycle turned a different color on us. Now the market needs to go to 27.14 and a quarter, which will probably be above the MA1 before I can move the stop to break even, which will be our entry. Okay? So let's see what happens. We almost have the risk off the table. We just need a... Okay, so that was the close above. My bad. All right, so how's this? All right. Sorry, guys. I'm fumbling the ball today. There. And this was the exit. All right, so let's review what we just did. Now, you were giving some grief. Excuse me. We're getting some grief here because the cycle is turning red, right? So that's not the best setup. But let me review what we just did again, okay? Because, again, a lot is happening and I'm trying to go over this in more of a structured setting here. All right, so here we go. Bullish cross happened back here. Okay, we were congesting for a while, right? Let me get everything together here. Man, I am not on my game. We were congesting for a while. So we said, you know what? We're going to stand at parade rest. We're going to wait for the market to break out. It finally does, right? Okay, we're looking for the market to come back and gravitate toward the BBC. We get 2 red candles and we drew the trend line. Okay, we draw the trend line. Why? Because we never know if it'll get back to the BBC and do the normal thing, or it might just take off. All right. The fact that it closed on the other side of the trend line and the cycle turned color on us, we needed the trend line in the close above anyways. This candle here, okay, lit the match for the long entry. Okay, this one here. Now the rule set is plus 4 ticks in our favor or a close on the other side of the MA1. The MA1 is this red and blue line. That is the candle that said move the stop to your entry. We did just that and was stopped out on that candle. And look what just happened. The normal thing for the market to do is for the green line to do what? Pull away and close the gap, or at least make an attempt, and the market makes a new pivot high. Guys, this is going to happen. You're going to get stopped out at break even, and the market is going to go sometimes in your favor. Here is what you will do, because I see this all the time. If this happens to you once or twice, you're going to say, nope, I'm not moving the stop loss, and I'm going to wait because I don't want to miss out on this right here. So what ends up happening is your break evens now become -8s because you're not moving the stop. And guess what? This new thing you just learned is garbage, and you're going to throw it to the side like a new kid with a new toy. Gets tired of it, throws it away. It doesn't work. Wah, wah, wah. Okay? The solution, you got to exercise some discipline, and you got to move the stop. And you're going to get frustrated when this happens. We all do. Okay? Just going to have to do it. So the rule is, okay, plus 4 ticks in your favor or close on the other side of the MA1, move the stop to break even. And yes, the ES is at the high of the day. Bart, that's okay. I know Mike uses that as a rule, but I don't mind that so much. All right. So let's go back to crude oil. Why? Because that's what we do. I zoomed out. Notice I did that, and we got a lot of sideways chop here. Okay. So this looks pretty bullish, right? We had the bullish cross. We had a pullback to the BBC, and we have a cycle that's got a blue and have a nice pitch to it, right? Okay. Concerning red resistance dots. Okay. This would be a bullish close. Okay. This would be a candidate for a long. Okay. But again, zoom out. Okay. We're just in one big sideways channel, so I'd be really careful of that one. Okay. Here's that natural gas one that I talked about earlier. Okay. I was excited. All right. Thank you. We had the bearish cross here. We had the pullback to the BBC and the down close. The problem was we didn't have any divergence. The green line wasn't over above it. Okay. Right here, what do we have going on? Okay. We have a classic momentum trade, right? Okay. This is a momentum trade. In fact, I'm just going to take it off. The momentum trade is this. I just threw another rule at you, and I didn't want to do that, but we get in the habit of drawing a trend line, right? Okay. We need 2 green candles to do that. Green candle, green candle. Oop, we have a close below the uptrend, right? Not only do we have a close below the uptrend, we have divergence down here, but we also broke dynamic support. This close, because it's on the other side of that MA1. Okay, the MA1, this is a very aggressive trade. You would get short on the close of this candle. The only difference between this and the traditional slingshot setup that I've been advertising here is that the stop moves to break even as soon as you get profit. Okay? As soon as it moves in your favor, you're moving the stop to break even. Okay? That's the only difference. I think for the guys that are brand new, this is probably a level 2 kind of deal where you've gotten to know the setup. You certainly better know how to use this DOM. All right. But you'll see Michael take a lot of these trades in the room, so that's why I brought that up in a small way. Okay. Going back to the crude oil, kind of just laboring here. It kind of doesn't surprise me because we have dynamic resistance and we are in a bigger chop fest here. Okay. All right. Let me go back to the crazy S&P because that's the one that's actually moving. Good time to cover this right now. Okay. 2 red candles, we can draw the trend line, correct? We also have a close above that candle. Okay. Trap number 1. The slope, number 1, the color is red, right? So that's not good for the home team. Number 2, look at the slope of it. It's at a 45-degree angle against you. Okay. That is one disqualifier. Okay. The first disqualifier is we're trading sideways. We're not trending. So that's a disqualifier. Number 2, as I said earlier, if the cycle is red, that's fine. But if it's going against you at a 45-degree angle, which is pretty obvious here, if you get any setups, that's disqualifier number 2. And Bill, if you're in the room, What's disqualifier number 3? If this black step line, that's right, gets into the cycle or into the BBC, it may or may not do it here, but if the black step line here gets into that BBC, that's also going to be a disqualifier. Okay, usually this and this, the black step line, that usually happens at the same time because what you're getting is what's known as a cycle reset. That's what you'll hear Michael talk about. What does that mean to you? Don't take a trade. Don't worry about what cycle reset. Okay, it might be saying, hey, the market needs to dip, or I mean, this market has to correct before it advances. Okay, bottom line is for you, don't push any buttons. Okay, the euro currency finally getting up to the BBC. Okay, we have 2 green candles to draw a trend line. Notice I have it drawn. Okay, that's pretty sloppy. I apologize. Wick to wick. If you see a wick, start with that. All right, like that. That's how I would draw it. All right. The cycle is blue. It doesn't have a bullish tilt to it. It's still flat. Okay. So the fact that this is a different color, okay, we want it red, it's blue, that's watering down the probabilities. But number 2, it requires the trend line to be drawn. So what this implies is this market has to close on the other side of this trend line before we can get short the euro. Okay. Right now it's not happening, so we'll see. 1 second. David, let me call you back, okay? I'm in the middle of a webinar. Okay. We have the divergence mark. That's okay. The green line is above the cycle. There's plenty of room here for the market to express itself. All right. It's lacking the confirmation. Let's see what happens here. All right, so I'm going to zoom out. Okay, now we're a little bit sideways here. The market's trying to figure out what it wants to do. This is very typical when you see the red line or the cycle turn against you at that 45-degree angle. The market gets a little confused. Sometimes it'll blast off, and you're like, man, I should have gotten it in that. And what Bert was telling me on Thursday is a crock. The idea is a lot of times it'll go into chop. Okay. So we have to make a new pivot high before we can get excited about getting long again. Okay. I'm scared to even touch the Dow. Okay. Notice how I zoom out. That looks very bullish. I zoom out. We're trading sideways. See this? Top here, and look, top here. All right. How would I draw the trend line? Good question. Like that. Okay. Trend line would be drawn like that, off these 2 wicks. All right. But Bert, you have the up close here against the BBC. It did the normal thing. Because this turned colored on you, it required a close above the trend line in order for you to get long. Okay. The close of that candle would light the match. All right. Now, the problem is, again, zoom out, and we're not necessarily trending. If this thing explodes, it's because we've been trading sideways and it takes off, and it's more luck than anything. Okay, so this could be a huge winner. Okay, and it is because the fact is, we're trading sideways, right? It's like pushing down a spring. You're holding it down, and then you let it go, right? That's what could be happening here. But the rule set is, look, if this is a new, different color, has to close on the other side of the trend line, and it has to be trending. And in my opinion, it's not. Okay, but look, it's moving up, and it might just blast off. By the way, this close here, no, still resistance. Okay, just because it sticks its head above the top there doesn't mean, okay, that's still resistance. We want to see some candles above this. It's just, it moves so quickly I can't even talk about it. All right, so back to the S&P. We made some higher highs, right? Okay, got some space. See if we can go back to the well again. The cycle is blue. Okay. We got another trend line here. This time I take it off the body. Okay. Trend line should be drawn like this. All right. Here's the scoop. The up close right at here with the blue line. You might say, hey, this is bullish divergence. This is a long entry. The fact that the cycle here is blue is fine, but look at how flat the cycle is. Okay, Michael will refer this as like a flat cycle. Okay, if faced with this, even though it's going up here, there's no trade here. Okay, so it had all the components. Okay, that was good. This was good. Okay, the green line's underneath it. But the fact that this cycle is flat here, okay, blue, okay, you wouldn't take that trade. Yep, I know it's going up. Looks good right now. Opportunity lost. But that is something Michael will talk about. So, all right. All right, so let's see what happens here. So the market's going to have to make a new pivot high in order for us to get crazy about it, okay? So let's see. Yeah. Cindy says, when the market is in chop, it helps me to draw a box as a reminder to wait for it to move out of the box. That's correct. That's a good thing to do or get in the habit of doing. After a while, you'll be able to take those training wheels off a little bit, and then you'll be able to visualize it. Okay, but that's good that you do that, because now you're just training your eyes again to do that. All right, let's try to go into something that we can at least talk about. Okay. That here, okay, to close under the trend line with a blue cycle, okay. It requires a trend line to be broken and close below in order for you to take a short trade on this, okay. Again, this is starting to curl up a little bit and concerning to me, especially after the cross happened way back here, okay. So I'd be a little bit concerned about that, okay. So right now, for me, I would not take that trade because it's blue and it's starting to curl up a little bit. All right, 1 second. I'm going to put you on mute. This is Bert. No, not JetBlue. Our number must be close to JetBlue's number because we get calls all the time for JetBlue. Anyways, all right, so again, we do the normal thing. We get back to the BBC. We get in the habit of drawing the trend line. We get it closed below the trend line. It's required because the cycle is blue, watering down the probabilities, but now you're faced with a cycle that might be curling up. So then the question you might ask yourself, is that 45 degrees? Is it closer to 30? Is it 20? My thought has always been it's got to be easy and obvious. So if you have to ask yourself those questions, just don't even take the trade. Okay, just walk away from it. Fight another day. I'm trying to delete this trend line. My gosh. All right. Okay, 2 more red candles. Normal thing for the market to do, pull back to the BBC. The cycle is what color? It's red, watering down the probabilities. So it's going to have to close above the trend line. Problem here, it's got that slope to it that we're not crazy about, but we do have the bullish divergence, right? The green line is underneath it. All right. So right now, this is a disqualifier, even though we had that up close. Okay. That is a disqualifier. We would not take that trade. Okay. Well, clear on that? Okay. Are we trending? Yes. We've been making some higher highs. So that one's a good one. Okay. We're trending. That's fine. Okay. This was the first pullback. Okay. We had the up close. That's that 45-degree angle. The reason why, okay, it did the normal thing. The normal thing is for the market to pull back to the BBC. We get the touch and the up close. Okay. So you're like, oh, I'm excited. I want to get long. We finally had a pullback. All right. The thing is, number one, that turned color on you, the cycle, right? But number two, it's got that 45-degree angle. And here we go. The market's expressing that. All right. So back here, I think there was one where it just took off. Here. This is the one that would have took off, right? We would have made money on. Okay. Here's one that didn't. So again, a lot of times, if this is wrong color, it's going to backfire on you. Okay. So just consider that. All right. Natural gas. Zoom out. This is a problem here, right? Because we had some support. However, the way I would draw the trend line, bottom of the wick to the corner of the body, just like that. Why are we drawing this? Because we don't know if it'll get back to the BBC. If it closes on the other side of this trend line, we have a red cycle right now, and we have bearish divergence. Red cycle, green line is over on top of it. The space here is the divergence. What color is that? How do I know what color that is? Which one? Sorry, Mark. So there's a potential short setup. Again, my only thing would be, this isn't easy and obvious because I zoom out, we have some support back here. So we can have one big sideways channel here. Okay. But it has a lot of the variables. Yeah. So that's a bullish candle because it's got the close toward the top there. That's a bullish candle. That's a bullish candle. That one there is a bullish candle. See it happen here. Bullish candle happened here. If we're tilt the other way around, okay, correct. It went down but closed up. So that's how I would draw that trend line. Now that was a better way of explaining it, Mark. I'm glad you said it that way. Right now, for some reason, I'm all thumbs and I can't get everything smooth here, so that helped out. All right, so natural gas. All right, let's go back to crude. We talked about this one trading in a range. Okay, this was... All right, that scares me. 1 second. All right, I heard some dings. I want to make sure I didn't have something left out that I forgot about. Sorry. I'm in demo mode now. This was the live account. All right. Lost track. Oh, this was the bullish cross. Okay. We said, hey, this is a normal thing for it to do. We got that bullish slope to it. We got bullish divergence. And we zoomed out a little bit. And we're saying, hey, might be just caught up in chop here. Okay. And I think the fact that we're kind of laboring here is telling us that. All right, let's go back to the indices. Okay, now we have a bearish cross, right? A little bit of support here. That's a little concerning. Okay, let's see what happens here. The cycle is red. That's okay. Got a nice slope to it. We have the bearish divergence. The green line is above us. So that's good. Okay, so the trend line. It would start off like this. Okay, now it's like this. Again, it starts like this. Now it's like this. Now we have the up close. We have the touch of the BBC. Okay, the cycle turned on us. We'd have to close below this trend line. But again, this might be a problem here because the black step line might be piercing the BBC. Sorry, guys. The guy's putting in something in the wall. So let's see what happens here. That's the down close against the BBC, but the fact that this is blue, it has to close underneath the trend line here. Okay? If it does that, it's probably going to close under the MA1 here, that buzzword, and it'd be more of a momentum trade. Okay? Remember, when the cycle turns color on you, it has to close on the other side of the trend line. Let's see what happens. If we get it, we'll just jump in there just to see some action with the Dom. Okay, this has got a blue cycle. Okay, it's flat. Is it 25? Is it 45? It's not 45, but it's, again, if you have to ask yourself that question, no trade. Just keep it simple. Okay, this will end up turning out to be a momentum trade. So you know what? Take it off the table. Let's move on to the next one. I'm not even going to try to do it. Go back to the natural gas. I'm going to keep on the natural gas. We'll go to the gold. Let's see if anything's going on there. Gold, zoom out. Are we trending? Got some support here. Not necessarily going anywhere fast. I feel like we didn't miss out on any opportunities. Let's go back to that euro. We talked about this being the down close. Okay. We drew a trend line here just like this. All right. The question was, this was blue and starting to turn up, and here's the grief that you're getting for that. Not only that, now the black step line is in there. These usually are synonymous with each other. Okay. Usually those two happen at the same time. That's referred to as potential cycle reset. I'm going to try a different market. Oh, that's even worse. British pound. The yen, this is sideways. See the sideways action here? Zoom out. Sideways here, support. I know we poked our head underneath it, but we're still sideways here. All right, so let's try to go back to the S&P. I mean, if it's moving, let's see what can happen here. There was that break a little bit. There's some things that I see that doesn't surprise me to see that, but so let's see. So the reason why we took this off the table, we drew the trend line like that. That would have been the down close. Okay. This was turning a different color on us, so this had to happen. Okay. I thought this might be a momentum trade. It didn't, and then we had some green support dots. This wasn't really the easy and obvious one that we're looking for. Okay. That's not that one that you're really looking for, even though it's going down. Okay. That's not the best setup you want. All right. Are there any other questions? I've been hipping and hopping all over the place here. Okay. I feel like I'm not running on all cylinders this afternoon. I don't know, because of some of the markets we were looking at were jumping around. The phone was buzzing, and my cell phone's calling me, and I'll do that, Bill. I have his email. Mark, I might have Bill call you because he had some. You were talking about that other group that I won't talk about. Yeah, you, Mark. That other group that we were talking about. I don't want to talk about their name on, but he had some insight on that because he is a member on that one, and he's the guy that I was telling you about that I knew. So, yeah, of course, I always want to ask, but he'll give you some insight, good or bad. It's probably going to be bad, of course, because or he'd be hanging out there. But a lot of the same that you were telling me is exactly what he was talking about, which is kind of scary. All right, so we're back to the ES. Got sidetracked there. That's my fault, guys. I'm going to still go fishing here a little bit. I don't think we might have anything else, but the natural gas is a good one if it can set up here. That could result in it. That could result in some further decline. Again, I think this was a problem with me right now, so it might not be really juicy on that one. Well, let's see if the S&P can take off one more time here. Again, here's how I would draw the trend line. Off the bottom of the wicks, that's the down close. However, this is blue. It's got a 45-degree angle against you. That means no trade. Look what's happening here. Bill, drum roll please. The black step line is possibly breaking the BBC, which would also negate the trade. Okay? So what this suggests is, number one, there's no short trade. Okay? Number two, the close, this candle here would light that match to the downside right here. Okay? But the fact that this has got a 45-degree angle against you says stay away. Again, it's going down. Okay? You get frustrated at those things, but a lot of times they don't work out. Okay? So you have to remember, different color. Different color means draw a trend line. Different color means it has to close above or below the trend line that you've drawn. Okay? And number two, if it's moving against you at a 45-degree angle, that's a no-go also. Okay? So let's see. Let's see what happens. It's going down. Of course, he would have made a few ticks here. Okay? But again, the short would have been here, 27.18. This candle, 27.17.5, says move your stop to break even. Break even says you would have moved your stop to 28.18, your entry, and guess what the high was, 27.8. So the result is a break even, and look at what the market's doing. Okay, it's trading sideways. So a lot of times you'll see that. Okay, so trust me, just if it's a different color at a wrong angle, don't do it. Okay. All right, it's 2 o'clock. Holy smokes. All right. We were all over the place today, okay? There was a lot of things. I think we did the crazy Dow thing that I shouldn't have been doing anyways because it was moving so fast and I couldn't critique and give you the highlights on. That was a disaster. The S&P gave us a few things to look at. The takeaways for you guys. Number one, get in the habit of zooming out, okay? Let's see if the market's really trending. I'm not asking you to take the 4-tick range and go into a 30, okay? Just zoom out. That's going to help. Number two, get in the habit of drawing a trend line. Once you have 2 candles, okay, that you can draw a trend line off of, okay, if we're in a downtrend, down, 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 and you get 2 green candles, then you can draw a trend line. If you have an uptrend, up, 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 and you get 2 red candles, then you can draw a trend line off the tops. Okay, get in the habit of drawing the trend lines. Okay. Gold. Not quite, Bart. I like the divergence. Okay. Support here, green support dots here. Not sold on that just yet. Get in the habit of drawing the trend lines. Watch the slope and the cycle of the color of the cycle. That's going to be a big deal too. Okay, those are some of the traps that people kind of fall into all the time. I talk about pretty much the same things every week. And that's because those are the same things that people kind of fall into, those same traps. So just keep an eye on that kind of stuff. An hour went by. I try to hang out. I'm in the room every morning. Michael steps away. I try to give you some commentary, some things to look at. I'll continue to do that so we have something to, I can talk about when things are really moving. Do you think the trades, when we don't draw the trend line, are more successful? So the traditional slingshot setup where we go to the green line and react. Good question. I'm not sure, to be honest with you. I haven't really looked at it that closely. My feeling is this. This goes to, that's a good question, though. No one's ever really asked me that. So Mark's question was, do you think the trades, when you don't draw a trend line, are more successful? In other words, what he's saying, hey, they get to they do the normal thing. This does the normal thing, or the ones where we don't get to the green line, we fall apart. Honestly, I think it'd be the opposite. I think, number one, I know this picture doesn't show it, but there should be a trend line on this picture right here. Okay? There should be a trend line right here. Okay? Because that's what you should get in the habit of doing. I think a lot of times, if the market cannot get to this BBC, that's telling you the trend is down or the trend is up. If it can't do the normal, it's telling you it has so much momentum. I would think those would be actually the higher probability ones, just based on that. And that's what you want, exactly. So I think the idea of just thinking about it out loud, that would be my thought. It can't even get to the BBC, all right? Tells you, you know what? We want momentum. It's got momentum. It can't even get there. Go for it. That would be my thought. But you know what? I don't know. But that's my gut. So, all right, that's it. That's an hour and 10 minutes. Sorry, it was kind of a hodgepodge of all things all around. So, we'll do it next Thursday for another hour. Like I said, when Mike's not around, steps away to the bathroom or something, I'll step in and see if we can't do anything predictive, in the mornings. Okay? All right, see ya.